Welcome to Market Movers. I'm Dave Hightower, joined by Dan Bossie. So Dan, let's set the table. The report coming up is the first 2019-2020 kind of setting the tone for the market. We got a lot of extraneous items, bad weather so far, trade issues may be coming to a head. How do we set it off here?
Well, and even with that, David, we've got this report that'll give us our first estimates of China being excluded in the world balance sheet. So that's a new ingredient for everybody to think about also. As you look at the report and we look at the data that USDA and WASDE will have, we would imagine that U.S. corn, soybean, and wheat end stocks will improve or increase slightly as we look forward. The report probably will be seen as slightly bearish. That being said, however, I think the items you talked about in trade and weather and all the other things surrounding the world, and is there enough premium in the markets, will be something that gets widely discussed once we get beyond the report.
In fact, if you look at a total short in the grain complex, we have 1.3 million shorts, so there doesn't appear to be much in the way of a weather premium in the market.
I don't think there's hardly any, and in fact, if you ever get that short covering, David, I think that the producer is going to be very patient in making sales of cash grain, which could give us some more volatility as we look forward to the middle of May and to the month of June.
And I didn't mention it as a big picture issue, but the ASF situation, that could actually be an issue that cause them to lower exports.
Well, they should lower exports in terms of soybeans. That export number is probably 25 or 50 million bushels too high, so we would look for that number to come down. The same can be made for corn and potentially wheat. So as I suggested earlier, the report by itself will be seen as slightly bearish.
And again, we're sitting here today at the cusp of a big decision on plant corn or plant beans.
Yeah, and if we look at a lot of producer clients here in the Midwest, when they look at opportunities to take prevent plant for corn, that number is big enough that we may see 3 to 5 million acres of corn actually not get seeded this spring.
Excellent. So before we dive into our trade discussions, I'd like to point out that these trades are examples and not recommendations or advice. So Dan, set us up here.
Well, David, my trade example, I'm looking at buying a July 370 corn call and selling a July 360 corn put at a cost of 4 cents. I'm going to risk 6 cents in this trade with an upside target of 30 cents. July corn right now is trading at 368 a bushel.
Great. So you're relying on the underlying strong fundamental value, trying to protect your premium with some short premium sales.
Exactly.
So Dan, as a trade example, I'm looking at a longer term strategy with at least one component here. I'm looking to buy September corn, $4 call for 12 cents. I want to protect and partially finance that premium outlay with the sale of a shorter dated June cereal corn call at 7 3/4. So if we get a post USDA report break or a window of planting capacity, I want to take profit on that short call if the market breaks, and I want to then hold that $4 call for a long-term objective of 29 cents. Sep corn's trading around 375, July corn at 368.
I like the trade, Dave. We're really in the same camp looking at the long side of the corn market. It's just how we get to that next phase of higher prices.
So Dan, on Market Movers, we like to educate new folks just tuning in. This time, appropriately, we're going to talk about weather premiums. Are they starting to come into prices? And secondly, there is a mechanical adjustment on yields that happens after we progress through certain dates.
There is, David. The key planting date in the Midwest on corn is May 10th. If we get beyond that date, we start losing about 1% of bushel yield per day. So any corn planted after May 15th really starts to have a yield drag. And this year, accordingly, farmers have prevent plant options that are very attractive that may also take down acreage.
So we're set for a little volatility. So thanks, Dan, for your insight. We'll keep a close eye on the markets. Thanks for joining us on Market Movers. I'm Dave Hightower. Trade well and trade smart.